Hello and welcome to this shipper update. I'm Anthony Smith, Chief Economist here at FreightWaves, and it's Monday, so that means we're looking at the upcoming releases for the week and what they might mean for you and what to keep an eye on. So starting it off real quick, we're going to jump into our first big release of the week, and that's going to be in housing starts. This is going to be a big week for housing and construction, and behind me I have here total housing starts for the USA. And looking at the overall US housing starts, we see that there was an uptick in the most recent week, or most recent month I should say, of 6.8% on a month-to-month basis. We saw that permits dropped, which we're going to get to a little bit later, but we saw that this uptick in housing starts really start to show a telling story that there's going to be a big ramp up in housing starts as we continue to move on throughout into the warmer months of the year. We're talking about spring months, summer months. We're going to start to see a bit of an uptick here. But we have to temper some of those expectations there, because when you look at some of the trends that we're seeing within housing and construction, a lot of it's going to be built around what's been happening within the industry. And that's going to be built around, of course, affordability, mortgage rates, and available labor. And so when we're looking at mortgage rates, there was a significant pull forward seemingly for housing and construction. When we look at the expectation that there's going to be an increase in mortgage rates moving forward, that expectation is almost built up into this FOMO effect where people want to lock in those mortgage rates before they increase any more, pulling some of those housing starts forward. And so we're looking at that permit activity. Even though we did see a downward movement of 1.9%, we have to keep an eye on some of those other trends as well. Talking about some of those other trends, we're looking at things like starts under construction at the end of the period. Looking at homes that are still under construction, we're seeing that it's still up 22.8% as of last month's release. That's going to be one to watch closely, just because it's really telling us that there are still more homes being constructed than they're actually being completed. When we're looking at overall units completed, we see that it's still down 2.8% on a month level. We're looking at that. That's really telling us that there is a significant backlog for these homes coming up, and that there is also a backlog when we look a little bit deeper into the industry for available labor on putting up these homes in the first place. So those are going to be two big factors to kind of dive into as we look into this upcoming report and dive a little bit deeper into it. Going into our next chart here, we're going to look at home permits, or building permits, I should say. When we're looking at building permits, it's going to be one of those areas that's looked at as a leading indicator for housing starts. Of course, we can look at our flatbed outbound tender rejection index to see what's actually happening on the ground right now as of just yesterday. But when we're looking at permits, that's just going to be an expectation that there's going to be more building activity coming up. When we're looking at housing starts and building permits, there's some interesting trends that we have to kind of dive into, or classifications that we have to kind of just really kind of flesh out here. We're looking at housing starts. The definition of a housing start by the Census Bureau is that that ground has been broken. Doesn't mean that there's framing or building product materials on site, just that ground has been broken. So it doesn't mean that there's the foundation's not there, the frame doesn't have to be there. Ground's just being broken. So that can really mean that there can be an extended time for these home completions. When we're looking at permit activity, as I mentioned earlier, there was a significant pull forward for homes being built or put up, because there's been a lot of individuals that would want a chance to get in a lower mortgage rate before they were to increase it once more. So that's a big expectation. When we look at indexes like the Home Purchasing Sentiment Index, the HPSI, or the HPSI as known internally here at FreightWaves from Fannie Mae, it shows that there is an overwhelming amount of individuals that expect that there will be an increase in mortgage rates as we continue to move throughout the year. So really looking at that perspective, it really tells us that there's a lot of prospective homeowners, or buyers, I should say, looking to get into the market. We're looking at those shippers that are really tied into this industry, a lot of them that are maybe not tied to the actual building of those homes, might be tied to the downstream impacts though. We're looking at furniture, we're looking at electronics, goods being filled into those homes, because usually when folks buy a new home, they want to fill it up with new furniture, new goods, things like that. So that's going to be another area to watch closely. As we've seen with the most recent retail sales data, that did show that there's been a pretty significant shift in some of those purchasing habits from those consumers. We're seeing that the furniture isn't as strong, electronics isn't as strong, retail sales for non-store retailers isn't as strong. So we're looking at that. That's going to be something to take into account, is that there isn't as much strength downstream as there has been in the past for these new homes being filled up with new goods. So that's going to be one to watch significantly, or very closely, as we continue to move throughout the year. The other big thing to kind of take into note that we're going to be watching for in the upcoming coming week is going to be on our next chart here, and that's going to be weekly initial jobs claims. This is going to be one of the last strongholds for the overall economy here. We're looking at the strength in the economy. We're looking at the backbone for the economy. It's really going to be built around how strong are those consumers, and that's going to be built around the jobs market. So an employed consumer is a spending consumer, and when we're looking at the overall job openings, that's going to really be able to put in that level of confidence for a lot of those consumers to trade up and get a higher paying job. Because of the vast amount of openings, those consumers have a significant amount of optionality. And this is going to be one of those areas that we have to watch closely and make sure that it really holds strong as we continue to move throughout 2022. And with that, I'm going to toss it back over to Kaylee Nix.